And here's the latest on the markets. US futures trade in the green, which is up over 2%. And most of the Asian markets again tracking rise in US futures. So how will the Indian markets react once trading begins today? Let me cut across to Aisha, who joins us for more on that.
Well, thanks for that. It's going to be green this time around, at least to start off with. Whether it continues to stay put, that is really anyone's guess. But just to put things into perspective, look how we shut shop yesterday. A crack below the 7,800 mark, in excess of 5,000 crore rupees. That's the kind of selling that we've seen from FIIs. There's been buying by DIIs, but that really couldn't help rescue the fall in yesterday's trading session. Net result, investors out there have managed to shave off market cap worth 7 lakh crore rupees. But this morning, the screen is telling you a different story. Take a look at how the Asian markets are panning out right now. Irrespective of a gap down start yet again for Shanghai, with some of the analysts on the street seems to believe that perhaps, that's the key role player in terms of this global volatility, this global weakness that we saw play out yesterday. So China still lower by 6.5%, but the rest of the Asian basket seems to be picking up from perhaps what the US equities did. Remember, the US markets, the Dow Jones Industrial Average in particular, started off gap down yesterday. It was down about almost 1,000 points, and then it recovered a nice 500 points from the intraday lows. So some bit of recovery, some bit of technical adjustment, and Asia seems to be picking up its cues from the US equities, which really took off from the lows of the day and saw a fair amount of recovery coming in. They made up for 50% of their early morning losses in US equities. So Asia's trading in the green, but the big news, or rather the good news this morning, is that the Singapore Nifty, indicative of how our markets are going to kickstart in trade today, that's showing you a gap up of 2%. Having said that, I must add here that this could be just a dead cat bounce. Remember, the market was extremely oversold yesterday. We've cracked below the 7,800 mark. It was a fresh 2-year low that both the Sensex and the Nifty clocked for themselves. The mid-cap index, when was the last time you saw the mid-cap index see double-digit cuts for itself? A 10% knockdown is what you saw for the small cap index alone. So yes, the market was definitely in an oversold territory. Today it's going to be a gap up start. Whether that gap up gets sold into is anybody's guess. But most experts on the street seem to believe that if you're looking at a short-term time perspective, wait on, keep the powder dry, keep some cash on your hand on the side. The market is going to definitely give you better opportunities. And by better opportunities, I mean that, China is still a very unknown factor. You don't know how Chinese data is going to pan out next, or for that matter, what the central bank is going to do next. Whether or not they're going to bring about and throw in another tool out there, devalue their currency, that's yuan yet again. Remember, that was the key trigger point. Just about 10 days back, the People's Bank of China, that's their central bank, chose to devalue their currency yuan by about 1.6%, and that really shook up equity markets, thereof. So yes, that is a big unknown factor. But if you're looking at long-term investment, most experts seem to believe that perhaps right now is the time you can start nibbling in. You are definitely seeing the markets get to attractive valuations. If not, all the stocks that you've been wanting to buy up until now, most of them are getting to that attractive zone. So that's the short and the long-term outlook for the market right now.